The pound is following through on that bullish reclaim from Friday, and buyers might not be done just yet. So we'll have all the details in today's video. We'll talk key levels and also a full rundown on all of the imbalances and unfinished auctions that could drive this pair higher, as well as the latest on the DXY. All right, so looking at the pound, this market is following through on that Friday bullish reclaim. So in the weekly forecast, what I discussed there was the fact that clearly this market has been range bound for months now. And what we saw here on Friday was we got the Thursday close below 1.338. We had the Friday reclaim back above. That right there was bullish. So in that weekly forecast, what I said was that we could get the push back here into this congestion, okay, this area up here. Now, looking at time price opportunity, and that's what this video is really going to be based around today, because I want to show you guys fully what I'm looking at here on GBPUSD. So looking at the 30-minute time frame, if we turn on TPO, now this is going to look a little bit confusing for those of you who are not familiar with time price opportunity. This is a premium trading view indicator, and what this shows you is essentially the market profile. So it's a way to visualize how much time a market spends in certain areas. So what we're going to focus on right now are all of these unfinished auctions and imbalances from back here. So you can see that during this drop back here from the pound, when it was breaking below this 1.358 area, you can see where we have these imbalances, these blue lines up here. These are inefficiencies in the market. And oftentimes markets do revisit these areas. The same thing with these unfinished auctions up here at these highs. These are also called poor highs. And again, markets tend to revisit areas like this. So you've got 4 areas up here for the pound, including this one back here from this high, which here on Tuesday, the pound is taking that out here so far. So there's no shortage of reasons for the pound to move up here in this area based on these imbalances from this latest drop. However, what this is going to come down to is, first of all, if we turn this off here, just to kind of clean things up and look at the price action levels, you've got this high from right back here, which is currently serving as resistance. And we can see this too from the daily time frame. You don't have to be on the 30-minute time frame to see this, because on the daily chart, you do have these lows from back here. You've got this high and now today's high on Tuesday. So this area through here is resistance for GBPUSD. First and foremost, if you're out there looking to buy this market, I don't think that now is the time to do that. Even though we could get a breakout higher, I think you've got to be careful, looking to buy into this 1.346 to 1.347 area. I think if you were looking to buy the pound, again, obviously, as always, it's not financial advice, just my opinion, but this Friday reclaim that we talked about in the weekly forecast, this was the area down here where if you were looking to buy, this was the area to do it. Because again, right now the market is coming into some resistance here on Tuesday. Now, you can see where we have, again, these inefficiencies up here. Okay, so these imbalances up here in this area, these unfinished auctions up here at these highs, that this pocket could become a magnet, so to speak, for the pound here this week. Now, this is going to hinge on a couple of things. First of all, the market has to get above this resistance area that it's testing here on Tuesday. This is resistance until proven otherwise. And also the DXY has to get below 97.7. So really back and forth market here for the US dollar index. Looking at the daily time frame, we talked about 97.7 in the weekly forecast and how the market had closed last week above it. So looking at the weekly chart, you can see where this level at 97.7 had served as support back here on a weekly closing basis. We got the close below again, close above last week. And it also tested that 98.6 resistance area here on the DXY. Now, the question is, are we going to get the DXY pushing lower to take out these imbalances from back here on this lower wick here on the weekly time frame, which if we go to a 30-minute time frame and once again turn on TPO, that's time price opportunity, you can see that we do have imbalances down here at 97.27, also 97.51 or so. So these areas could serve as magnets for this market. However, the challenge for dollar bulls is going to be if we see the DXY close back below 97.7 convincingly either today or tomorrow, then that could signal the push back down here toward these areas and potentially even this pocket down here around 96.8. And that could be the catalyst that the pound needs to come up here and take out this area. Because keep in mind, if we look out here and just zoom out to the past few months here for the pound, keep in mind, this is basically what we've seen, okay? Ignore all of these other levels here for a moment. And you know what? Actually, I'm going to hide these so that you can better see it. If we just hide all of this, this is what's happened for the past few months. We have the lows down here, and I'm going to try to draw a straight line as best as possible here. We've got the highs up here off of these highs from right back here. So you've got your range resistance up here in this area. You've got the range lows down here off of these lows. So again, this kind of goes back to, we talk about a lot in these videos, how It seems very obvious, but you want to buy low and short high. So when you're looking at this range, and this is why I said in the weekly forecast that I didn't think it was the time to look for shorts here, because first of all, we were in the bottom of this range. Secondly, we did get that reclaim on Friday. And so when you look at this here, you obviously want to be looking for, longs down here in this area and shorts up here. Now, what we saw in the price action since late July, we saw this move below the range lows. We had the reclaim here. Now up here, again, same thing. We had the market sweeping the range highs and then closing back below following that FOMC. So this was our FOMC candle. And as you guys will remember, this drop back here, we had imbalances up here as well. So off of this candle that we talked about at the time, that served as a target for this market. So basically, bottom line here, you had a sweep of the lows, you had a sweep of the highs. And this right here puts the pound back within this range. So again, if you're looking for longs, down here is the area to do that. If you're looking for shorts up here around 1.358, that's the area that you want to be looking for shorts. So with that in mind, if you are looking for shorts here, again, just my opinion, it's not financial advice, but this is the area to do it. You've got all these imbalances up here. You've got these poor highs in this region. Now, furthermore, another cool thing you can do with TPO, and we talk about this in VIP as well, but if we go up here and turn this back on, and I'm going to go in here and change this to a period of 1 month. Now, what this is going to give us, and I'm going to drop down to the 30-minute time frame. Now, what this is going to give us is instead of 1 day of a market profile, it's going to give us 1 month. The reason I'm doing this is because the pound has been so sideways. So one thing you can do is looking at these profiles. So this right here is 1 month. This is 1 month, etc. Okay. Because this market has been so sideways, you can develop what's called a composite, which is a fancy way of saying that you're merging profiles together. Okay, so if we merge this one together, that's 2 months. We then merge it with the previous one, that gives us 3 months. Merge this with the last one over here, that gives us 4 months. I'm only doing 4 months here because if we go back, you can see where this price action is a little bit lower and doesn't really line up with that range that we're looking at. Okay, so based on this, what you can see here is we have a point of control, this POC, and I'm going to draw a horizontal level right across there, just so we can remember it. And point of controls like this, what this means, again, it's a fancy way of saying that this is the area where GBPUSD spent the most time during those 4 months. Okay, so it's a very critical level because markets tend to remember areas like this. And again, you do have the market carving out that 4-month composite right up there around this level. So if we take a look at this here, you can see that this line right here at 1.3544 or so, that's going to be your composite value of those 4 months, okay, the POC of those 4 months. So what's interesting about this is that it's right there in this same area, right? You've got the unfinished auction up here off the high, you've got this one here, and then you've got those two imbalances, those single prints up there around 135.70, 135.80. Okay, so all of this to say, guys, that this is a critical area for the pound, and it's one that could potentially serve as a magnet for this market, but also a critical resistance area if we do see the market come up here into this window, okay? So this area up here, guys, is going to be the one to watch. I did think at the start of this week that we could see a little bit more of a shallow move into this pocket here and the DXY bounce from 97.7 and then get that rotation lower back here toward the lows. But with the way the DXY is looking right now, I do think we could see a little bit higher here from the pound. Now, one last thing here. Let's take a look at the DXY 4-hour time frame. Let's dissect this a little bit more and see what we can identify here on the 4-hour time frame. So I love to draw trend lines from the closing price, and that's especially true in choppy markets like this because they tend to be a little bit more accurate and markets tend to respect them a little bit better because the issue here is that if you draw a trend line from this low, I mean, you could technically do this, but it's getting a little bit steep, and I don't love steep trend lines. If you know anything about trend lines, the steeper it is, typically the less reliable it becomes. And so looking here off the closing prices, what we saw here on Tuesday is potentially a bearish signal for the DXY. And even though the market is still holding this 97.7 area, I don't want to get too far ahead of myself and say that the dollar is bearish because it is technically holding this level here on Tuesday. However, what we've seen so far is the market failing to hold above levels like this. And if this was going to be a bullish market, you can see this candle right here tried to hold above. Then a couple candles ago, we got a close below. We've had the retest now as new resistance. So in my opinion, looking at this here, I mean, the DXY is starting to look pretty weak through here, right? We're not seeing that strong bounce back here toward this area. If we had seen a big green candle from this level, then that would be a different story. But instead, we're just seeing the market kind of grind into this area, this 97.7 area. And really lack any kind of strength. Okay, so this right here could be indicative of US dollar weakness. So even though, again, we are seeing the DXY hold 97.7 and we are seeing the pound hold below this resistance area that it's testing right now, I would not be at all surprised to see the market just kind of churn a little bit here, a little bit more, and then potentially break above here over the coming few days and come up here to test that area. Now, for the DXY, the invalidation for this, remember guys, this is a very sideways market. We're looking at the 4-hour time frame intraday charts. So you have to take this with a grain of salt. But if the DXY holds below here into Tuesday's close, then I think we get that move down here, potentially sweeping this low and retesting that 2011 channel support. Now, on the other hand, if the DXY does close back above here and we get the market establishing itself back above this, then that would be bullish back here toward the highs around 98.6. But right now, as I'm making this video, the market is holding below this and looking relatively weak because, again, even though it hasn't confirmed that breakdown, it's also not showing any bullish signs here from 97.7, which should have been a critical support level this week. So I think if you're trading these markets, just my opinion, but looking for that confirmed breakdown from the DXY or the reclaim of this trend line up here. And then for the pound, you're looking for that breakout above this high up here around 1.346, 1.347. That is resistance until proven otherwise. Okay, so keep that in mind that I don't want to get ahead of myself and have you guys thinking that this market is bullish and the dollar is bearish, because that's not the case just yet. We are seeing these markets so far hold on to these levels, but it is looking increasingly more likely that we potentially get the DXY lower, but really it's going to come down to the daily close here on Tuesday as well as Wednesday. And keep in mind too that on Friday we have US non-farm payroll. So that is going to be a big driver for these markets, including the pound. So just be really careful out there this week. All right, that's it for today's video. Subscribe to the channel, hit that like button. Don't forget to join us in VIP. Claim your 85% off lifetime access to Discord. See the link in the description of this video. If you're on the website, click on that join VIP link. Trade well out there, and I will talk to you again tomorrow.